right, team. Hey, Chuck with Traders War Room. Guys, it's your Sunday motivator. We got a lot to cover. The Chiefs just got done barely beating the Bills. It's been football crazy tonight. So we're going to go ahead and get cracking and get this over with. Guys, real quick, while I have you here, this screen right here, this is where you can go to check out Traders War Room LLC and all of our products and services that we have. If you're not a TWR premium member, I highly suggest because we have truly something for everyone. All sorts of platform. We got the penny stock platform. We got a text messaging platform, which is fantastic. We also have the 3 tiers of the Discord right here. You got your basic, you got your pro, and you got your elite. And then we have the instant message platform on the Telegram. All the links are in the description to include our website, which of course is completely intuitive. You can find everything here on the website as well, to include our trading university, which is fantastic. It mimics that of online education. So when you do a TWR university course, you get placed into a virtual classroom and completely intuitive, man. I mean, we put a lot of eggs into this basket. We wanted to make it so that it was like the online colleges that I do. And I think we got a fantastic product. So if you're truly wanting to really invest in your trading and investing journey, this is the way you do it, man. You get into the books and you do formal classes like this. We also have regular classes that you can do from historical that are, hour to 2 hour long lecture type classes on various topics and stuff. So truly something for everyone. But we're not going to get into that, man. Like I said, we got a huge week of earnings coming up this week, plus moving into earnings next week. And so without further ado, man, we're going to go ahead and just start getting into it. So give me one moment and I'm going to go ahead and turn off my video. I'll put the video back on when we're done, but I want to focus on the charts and stuff at hand. So here we go. All right. So basically I did a scan already of upcoming earnings for the week of 22 Jan, right? And so we're going to just knock these out, okay? Everything we're going to do is going to go from a bird's eye view approach, and we're going to look at potential winners and losers and stuff like that, okay? Looking for good setups and stuff. So LRCX is a stock that we have upcoming earnings. As you can see, a 6-month chart for the 4 hours. We're definitely on a breakout. Here was the previous, if you're looking for some technical analysis, right? Here was your previous level of basically resistance, right? And we broke through that level, came back up, which then created this now becomes support, right? And then once you break up to the new level, this now becomes your resistance zones, right? Okay, so oops. So now what you have is you have a new support and resistance area, right? Okay, well, we just broke above this previous resistance area again, right? After we tested the support, we broke above the previous resistance area. You could call this resistance as well, but I like more meat and potato when I do it. So while this would probably be okay to go ahead and call it resistance, I like to come back down here just because there's more price action associated. So either here, this would be more aggressive. This is more moderate right here for the resistance. However, we break through that, right? So now we can go ahead and push this up because we broke through that as well, right? So now this would be considered support-ish area, right? And we're now up here in this kind of uncharted territory. So where do we go from there? Well, this becomes our area of interest, where now we don't really know where resistance is at. However, we can conclude that previous level, right? About right here, when we look at previous level of support, was about the 798 to 729. So you can kind of look at the difference in this level, and you can conclude that if we continue a breakout, typically what will happen is you'll get about the same distance from here to here that you did on the previous breakout, because this is the range, right? So you had your top range, your bottom range. So you might get about the same distance, which would put us about, excuse me, oh, excuse me, whew, which would put us at about $70 push to the upside, where we already hit here about $30. So we could have about another $30 to $40 push to the upside, putting us around this area here, right? So this would be where I would look at for being our top line support if we don't see the pullback. And this could also be potential target zone. So basically, if we continue the upward pressure right on the breakout, because we already broke out of here, it would be okay to think that the likelihood of us having a little pullback to cool down, at least to come back down 50% of our breakout zone, right? Which would be about here, 813, 815, something like that, would be appropriate on a cool down. But if the market is still trending on the upward, the trend is your friend at that point, and you have to conclude that we'll probably most likely see some more push coming in, more squeezing going in. So this would be our high target. So basically what I would do, and this goes for any of these type of stocks that we're looking at, right? This is just good rule of thumb that I like to call. So we're going to go ahead and create these zones, right? And basically the zones can be on these candlesticks as well. And remember, because support and resistance is never just the line. Okay. When we're looking for triggers off of the day, we look at triggers basically at price action levels. But when we're looking for zone trading for ideas, it's never going to be just that cut and dry, right? What we want about the same distance here. We got some shelf, right? And you got about the top. So we're looking for breaks. We start to break below this area. We're looking for a little bit of a decline towards this line. Don't have to reach it. Most likely we'll get about 50% before we start bouncing around if we're ready to actually hold this breakout, okay? But we're looking for some downtrending pressure, okay? So that would be what we're looking for, a close below this area, a close above this area. We're looking for probably continuation and would be okay, high probability of success for swing trades towards the 860 level as long as we buy ourselves enough time. All right, so that's what we're looking for. So we got the zone. Trend is your friend, so we have to assume continuation unless the market tells us otherwise. It'll be important to see how the market goes on opening, and earnings will be an important catalyst for this. If the earnings are, in line or, not too stellar, we can probably expect a pullback. If they're outstanding and blow stuff out of the park, then we're probably looking at a pretty decent push to the upside. However, I would caution on earnings play. If you notice right here, right? This was back in October. We have pushed significantly, 575 basically all the way to 830, right? So, so about $300, we'll call that push in a relatively short period of time. Okay. So I do want to caution that that's an extreme amount of push going, whether it's valid or not, yes, but this could be a prime idea for big money investors to go ahead and take some bread off the table, lowering it to an area where they get a decent buy-in back into it for their next long ride to the upside, even if the earnings are decent. All right, so we'll move on to next wall. All right, this was one of those regional banking stocks, right? If you guys remember, this was one of those stocks that was real kind of meme-ish back when all that banking crisis stuff was going on. And it has my attention. The banking stocks were not doing so well last week. And what has my attention is we got kind of this consolidation zone here. Now it's not necessarily, you would look at this and maybe think that it's potentially, kind of forming a flag or something like that. But I would caution you on this one. The banking sectors did not do very well this past Friday on earnings. A lot of them underwhelmed. So I'd be watching this one. I would be more inclined to probably go short on this one because it's had a pretty decent break, right? You see this run here, and it's been in consolidation mode. So, in order for this to continue its ascent upward, especially being a banking stock, they have to really exceed expectations. If they come in line or are short of forecasting, this is going to fall. And we're probably going to fall back to these lines here because we definitely came out of this zone and we popped pretty hard. Two-leg strategy, one, two, and then this huge pop into this consolidation area. So I'm more inclined to go with a short strategy on this one. And that one would probably, I'd be looking for about a $5 to $10 push to downside, most likely $5 to be safe. You want to stay probably in the range, especially if you're doing derivatives on this. We're probably looking at around a $58 target to be safe. I wouldn't be going too far out the money. 55, 50 would be way too far out the money unless you buying yourself a whole bunch of time. But I don't think the volatility is going to push us that much. I think basically you saw a huge push here, right? 55 all the way to 67. I think we can get half of that back, and that puts us about 60. to about 58. So 58 would be the strike of choice that I'd be looking for. And I'd want to by time I'd want to go out into February, mid-month of February, if not at the end of February. And I'm not sure what options are looking like, but we can look at them real quick. We'd want to go 16 February, looking at puts, preferably. And where's my, I don't have volume. Oh, there's the volume. And we don't have much volume going into this. Are people going with calls? So most people are going with the calls. Again, you're not wrong if you decide to go with the trend as your friend type of thing here. But I'm not feeling the call. Bankings were having too much trouble. I'm feeling more to the slide. So I think I'd go against the grain, me personally, and I'd be looking for the play to the short side. You'd want to probably search around here and find the one that has the best volume for this. Well, you got some short plays. So here you got the short ones on the volume here. Looking at this wouldn't be too bad. Pretty decently priced and stuff like that. So this would be important. This would be something that would give a decent risk to reward. You go in on this one. If you get your downtrend that you're expecting, probably be able to make some money off it. I would still push out. I would still push out. I would still give myself. We'll see what the volume looks like going into tomorrow. Of course, everything was bullish, right? Going into the close. We'll see what the volume is tomorrow. If we start to pick up on some volume on some of these, I won't be hesitant to pick up a 62 to $60 contract to the put side on a kind of a gamble. Going in light, not a heavy position just in case it goes differently to the upside towards 70. But yeah, I'm inclined to go short on this one just because I see the run. Bankings were struggling. I think the bankings have to truly exceed expectations. They just can't come in line. And if they come in line or they're even short of expectations, I believe that they're going to suffer, just like Charles Schwab did and some of the other bankings did as well. Kia, man, I want you guys to pay attention to Kia, okay? Kia has been sweeping people, guys, and their vehicles are beautiful. They have a good business model. Kia has came a long way since it was the old school Daewoo's with the plug and plays back in the day. I do like Kia for the push. Again, this is another one that we're looking at. We're in uncharted territory. So again, uncharted territory. You kind of have to do it off of whim. Again, I'm gonna look for a top level. I don't want to go tippy top. I want price action, right? I'm gonna go for a top level, and I'm gonna go for a bottom level, right? And it's supported over here, so I like that. So my bottom, I always do red, right? My top, I always do blue. That's just me. And I want the difference from here, 586 to 542. So about a $40 move, right? So we got 580 to 613. So we got about 620, 625 push to the upside before we're expecting potential resistance. Now, the catalyst, of course, event, right, for this, of course, is earnings. So that could definitely put something into play with being earnings. And so this becomes our midpoint here. So that puts something into earnings. So basically, what I'm looking for is I'm looking for the breaks in this zone. I'm waiting for some earnings, see how the earnings play, or see if the trend continues. And if it does, we'll look for a trade in this one. Most likely push up towards into earnings, and then probably a sell-off going through earnings, just because we got a lot of push here. And I think again, people will start to take some bread off the table. We've had quite a few gap ups that have no clearance as of this time. I don't think we're going to clear these on a swoop, but that just gives me ideas that, you know what, we got a lot of people that are long. We don't have a lot of people that have been selling out. And so I think this would be a good opportunity for people to probably take some bread off the table, wait for it to cool down a little bit, come back in and ride this for the next one. INTC, guys, this is one of my preferred stocks this week. I want, so I made a fantastic trade the other day, call out with a PayPal. And the theory is that you can only beat a stock up so much before all the negative news that it has is just already out there in the open. And now it's time for the new stage of the company to, pronounce itself. I think INTC has a good opportunity for that. It's been on a rise, but you don't have a significant, huge rise. I mean, you got about, a $20 push, right, to the upside, but that's still for in its genre of what it does, right? We're talking about chips and microprocessors and stuff like that. That's not a significant move that we see with its competitors, AMD, NVDA, AVGO, and some other ones, right? So I do think that it's time for this to get a little bit of love, and I'd like to see the push here. And I think that we could see a push. You see a huge someone dump shares. That's where that came, and it came right back up. And of course, you see a little bit of sell off, a little bit of downtrending. I think this is setting up for a good entry long into and through earnings. So I like this one as a lotto gamble going through earnings. I want you guys, if you do this trade and you agree with the long scenario here, you got to buy yourself some time on this one. And as you can see, volume is pretty decent. And contracts are actually, this is not one of those that actually gets you juiced very much, but I'm liking this 55 out of the money. We got enough time. And if it gets the play, this could be one of those like the docu, right? A couple weeks ago, docu, a $5 contract made people 500 bucks. PayPal the other day, a $50 contract flipped, in 2 days and made people, $500. So this could be one of those type of opportunities on some decent earnings, and you're buying yourself enough time so that theta doesn't come knocking at your door that quick. And you got a great delta to theta ratio. Volume is nice. So I do like this $55 call. This is the one I'll probably look to get into. And of course, if you guys are on my Discord server or any of my other platforms, you guys will know exactly when I get into this trade because I'll alert it. But this is one I'm really looking for. Get my entry, and I'm looking for it inside of this level, 55 to potentially the 49 to 55 level, pushing on to February. So I like that one a lot to the upside. And that's just basically looking at the chart, kind of going here, get your top, get your bottom, right? And then we're looking at what? That's about a $5 push. Just flip it on its upside, $5 push to the upside. And that's just, having beating earnings and having good forward guidance. And then potentially, if we get some super duper stuff out with this, we can maybe even see, an $8 to $10 push, which would be crazy for this stock. And we got enough time on there to allow that to mature and to continue happening, right? Kind of like this thing, right? Where you went from 30 over a period of time to like 45, a $15 move. Well, that gives us that February 16th gives us enough time to make that mature move off of productive earnings. So I like that one. IBM. So IBM is interesting. This is another one that is poised for rapid growth. But again, with IBM, you're going to hear this a lot as we go through this. I want people to understand that can we continue to travel upward? Yeah, absolutely. But you're going to see a lot of people start looking at these higher levels as they're going to start getting antsy, especially if we keep ascending, right? If this thing ascends up to 175, 180, you're going to start to have some big money investors that bought in on this dip, right? Or anywhere in here, and they're going to start thinking about, well, you know what, you know, we're due probably for a pullback with some explosive push that we've had. I'm probably going to secure some profits, and I'll get a re-entry into the stock. I like this one for a long entry. I'm always long IBM. I think this one's a share candidate. I like this for shares. This should be part of your growth portfolio if you are into investing. But as far as a breakout here, we're gonna have to play this by the momentum of the stock. If we continue the ascend, the trend is your friend. But if we start to see, buyers exhaustion coming in, then we're going to probably look for the tippy tip, and we're probably going to play the reversal. And I think that off of the reversal, if we get a little bit more push, we probably can get about 50% of this back off a reversal. And that puts us at about, 169, 168, if not retesting this area here, because this was light consolidation coming out of this cup, right? So you had this cup here, you had a handle of consolidation, then you pop. If we can't hold it up here, we'll probably come back down, and this will be our new range of trading on the IBM. Zion, another bank. Now this one's I know people they're looking at this and they're saying this is similar to a wedge formation to the downside with gaps on the up. But again, this is one of those banks, right? This is one of those stocks that has typically shown weakness when it comes to penny pension. Okay, so I just want people to be aware this descending wedge. Yeah, sure. I see the potential for this. Absolutely. I'm not blind. I see it. We got the trend right here, right? I see it, right? And then we get the break to the upside, and we can get the from here to here as our flip to the upside. So that would put us about what, 46, $46 push to the upside, a break off of previous high levels. Yeah, I could see it absolutely, but I can also see this being a leg strategy to go retest some of these support areas on inline expectations or underwhelming expectations. So just be prepared for that with these banking ones. They're going to be tricky. We're going to have to play these by ear, and just going with the trend on not just the overall market, but individual sectors as well. So if the banking sectors, if the market's trending, but you start to notice that the banking sectors are suffering a little bit, then you probably want to go short on the banking sectors and long on some of the other sectors, all right? Because there's a little bit of divergence in the trend that's happening. There's something other carrying the weight of the broader market trend that's not carrying over into the financial market sector of it. All right, so we got Capital One Financial again, another financial one. This will be interesting. I like this one for the downside. I think they've had a pretty decent run, and I think that they're going to underwhelm on performance. And so I do think that this one's going to fail, and we're going to get some rejection. So I do like this one for the pushback to the downside. I think 120 is a decent target on this one, and I'd be looking again. Everything we're looking out, man. We want to buy some time. I'm looking at puts, and you can see that I'm not the only one. This 125 has a lot of volume. This 120 seems pretty good in price range, and we got a decent delta to theta ratio. So 120 would be my target, looking for potential a put option on that one. Halbert. Halbert looks like it's pretty decent shape to go ahead and get a push to the upside as long as the earnings come in good. It's been beat up pretty well. So usually when you see these beat up stocks and they come in line or show that they have some forward projection that's positive with their earnings, you'll probably see a little bit of push. So I can see Halliburton make a decent case for a potential run and a push to go reclaim some of this previous resistance areas here. But again, this is one of those that if it doesn't perform well, we have been, if we come out a little bit, we have been down this road before. It's not afraid to go into the 20s. You see that over here. So we just have to be prepared for that. So if it does underwhelm, then you were looking for probably a leg to the downside, which would put us probably about at the 31 area, and then probably a little bit of consolidation zone with maybe a little extension back to the downside. But coming into this chart, we have a nice little cup forming, and as long as the earnings are okay and we got some decent news and some stuff like that, I think we're okay for a push to the upside. So we're cautiously long on this one. American Express. This one's a little bit different. This is a financial, but also a fintech. American Express is actually poised by a lot of analysts to be one of the preferred stocks for this particular calendar year. We've had a humongous run, so it'll be interesting to see how this performs on earnings. But I would not be surprised if we explode to go retest our previous kind of consolidation zone that we had here, and then we explode on some decent and unexpected positive earnings, and we go make a run for 200. So that would be, I'd be looking for the run towards this area here, off of this cup, right? Get a little bit of push. And then if we can break through this area without having a significant pullback, we probably can make that run to 200 and look towards the 200 area from a breakout. So I'd be looking for, this would be one of those that I would put a potential breakout if we get into this particular zone. So right now we're looking good potentially. It's poised. Got a lot of analysts that like this one. We have a nice little pullback, gives a decent little buying entry into it for positions long, especially on some good news, right? So we're looking for the push towards this zone. We break above this one, and we're looking for the breakout. And the breakout would probably give us about a push from here to here, which will put us at about that 200 zone. ASML, we got the W forming. All right. Be careful with this one. All right. They're going to have to really beat expectations with earnings to get the push past this and a breakout past this. Okay. W formations, right? You get these, right? W, we hit the double bottom and we got to pop to the upside, right? But now we're hitting, kind of a triple top all in the same area, right? And this would be a perfect area if we can't hold this area and break through it to get rejection. And that would put us about, anytime that happens, usually go 50%. So here, you don't go here, right? You want to go here to the level where your W formed, and then you want to go 50% into there. So we'd be looking at here to about this level. That'd be about our pullback level that we'd be looking for. That give us about 20, $25 to the downside on a failed breakout attempt. VLO energy has been struggling. I don't know how energy is going to perform on earnings with gas prices and stuff like that. This will be one of those, it'll be interesting. I actually like the energy sector, and I think it's poised for some push to the upside. It's been beat up and it's held well at these lower levels. It's held support very well, as you can see. I mean, it's been consolidating for a minute, have a little push, kind of a little downward wedge forming here, prime candidate for a push and a break to go fill this gap to the upside. So I am long on VLO. I do like it to go retest this previous zone here, but we got to be careful because energy sector, gasoline, oil, and stuff like that, it's very sentimental. So can easily flip on us as well. So we want to watch those earnings, but going into the earnings, I'm going to be long VLO with a strike towards this area. What I'm going to do for my strategy, got my box, right? You guys know I love my rectangles, right? So I got my box, and I'm basically looking for, oops, I'm looking for here, here, and I'm going to draw a 50-50 line in the middle. Right? That's my target, right? For the breakout. 133, 134, something like that. I'm not going all aggressive and saying we're going to break and exceed these previous highs here, but I like to push from here towards the area where I'm expecting to see some sort of resistance, hoping that it blasts through resistance, and then we go to the next level where we can definitely expect to take profits and expect a pullback here. But this is where I'd be expecting the break here and the pressure towards this line, this area. I say line, but anytime I say line, no, I mean area. This area for potential resistance where we want to at least trim positions long to make sure we secure some profits. AT&T, oh man, AT&T's been slipping on me. I used to buy shares of this all the time, and I missed down here. I missed down here. So, my shares that I have in AT&T, basically, I'm about at 13.50 per share on my AT&T, but I missed, and anything below 13, I missed it. I don't know how else to say it. But I do like this. We got a nice push to the upside, and this is a decent chart. I mean, it's been a consistent run. There's no reason to think that we're not going to break out. And I think that we have a good opportunity for potential break brings us into a range level of about here to here. So we're really just looking for about a $2 push to the upside. So probably looking at about 18.25, something like that. But I do like the potential break to the upside on AT&T. I think it has potential, and I like the chart how it's smooth, consistent incline to the upside. Okay, not really. It's had this previous chop coming here, but ever since this little area of the low, it's been making that nice, just consistent push. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. I like it. Pushing, breaking, and then getting about 100% of our range here to the upside. Flip us about there. Triple M, Triple M, man. We bought shares down here. We were telling people Triple M was one of those stocks. Anything below 100 was a buy zone, and then we got the dip that we were looking for. We actually got a couple opportunities on the dip, man. Where I went long shares a couple times, below 90 and stuff like that. So we've been buying shares on Triple M. It's had a nice little run. I think it's due for a pullback though. Anytime you see runs like this, these make me nervous. When you see when you see runs like this, these make me nervous. And the same thing over here. Anytime you see runs dramatic down, they should make you nervous because you're expecting potential because usually this is characterized as unnatural price action. Usually this is sentimental driven for something, right? And it's very aggressive price action as well, coming into kind of a consolidation zone. This is prime for potential to push to the downside, to go retest that $100 level. It could also pop up to the upside. We could see them absolutely smoke earnings and kill it and pop to the upside. So this one would be interesting. I'd have to go with my gut on this one and go off the probability that this was a natural push to the upside and it wasn't much of a dip. We got a 110 here. It's 107. So you got a $3 push down, maybe a little run in, retesting some of these highs, and then we see the rejection from the top to at least cool down one of these legs because we got multiple legs here. Leg up 2, 3, 4, 5, 6, kind of this consolidation zone, right? So maybe one leg, maybe two leg strategy to the downside, 99, 98 gives us a pretty decent window of opportunity for people to buy back in to the stock and then ready for the next this over the next course of earnings quarter. Visa, man, Visa's been a killer. Visa has been a killer, guys. And we like Visa. Push, but I tell you, Visa's going to have to kill earnings to maintain this level up here. If it doesn't kill earnings, we're going to pull back. We're going to pull back. We're going to pull back to about this consolidation zone here if we don't maintain this aggressive push on these. Now, I will be honest with you. Look at the credit reports, okay? Some of the due diligence that you got to look at with these credit card companies is that, yeah, they're making a lot of money. A lot of people are purchasing things and stuff like that. But look at those delinquency reports. 30-day delinquency, the 60-day delinquency, and the 90-day delinquency. So 30-day delinquencies are up huge compared to what they were, on statistics or whatever. 60 days are starting to get traction where people are starting to not pay their credit card bill on a 60-day rotation. Basically, what that means in layman's terms is, oh man, money's tight. I'm going to use my credit card so I don't have to use my cash in my bank account, right? And I'm going to use my credit card. The bill comes, it's either paying the heating bill or paying my Visa credit card. I'm going to pay my heating bill so I can keep my house warm because it's winter, and I'll get to my Visa card, or my payment is 100 and I can't afford 100, but I'm going to send them 50 to let them know that I'm not totally dissing them, but I just don't have enough money right now. And it's a credit card, so what are they gonna do? They're just gonna call me and blow me up with a whole bunch of spam and stuff. So delinquency reports are up. So I do see these guys potentially pulling back. They've had a hell of a run, but I think it's time to cool down a little bit on Visa. Verizon, I want you guys to buy shares of Verizon, okay? Right now may not be the time. Wait until after earnings. We might push up on it, but doubtful. I think Verizon's struggling a little bit to regain its market share and stuff like that. You know, we had this bottom here and we've had a nice little run, but you keep seeing people dumping out of the stock, right? That's telling me that, people are getting out on these jumps because they want to move on to something else. So I'm thinking that might be a warning sign of what's to come. And we potentially could be consolidating here. And instead of getting a break to the upside, we could potentially get in this push back down to these previous consolidation zones. So I'm going to be short Verizon. General Electric been making a hell of a run, man, and they got a lot of stuff going on. I like them. I think they got a good case for a breakout here. They're not going to move dramatically like some of the other ones, but I think as long as their earnings come in line, we could see the range from here to here. That's about a $4 move. We could see a $4 break to the upside. So I'd be looking at about 135 target on GE. GE Health has been doing fairly well, but they're struggling a little bit more to coming in. They've slipped off a little bit. And here's the issue with the healthcare industry that they're seeing a lot. Healthcare has gotten a lot more expensive to actually get healthcare. So it's becoming expensive to get to healthcare. The healthcare industry is a very important industry, but you know a lot of the procedures are starting to get more expensive. A lot of the more common stuff that we're doing is starting to become more expensive and stuff like that. While some drugs have gotten cheaper, it's been offset with different procedures that used to be cheaper because they were using less high-tech methods back in the day are now more technical with their methods, and so they're more expensive to get taken care of. So it'd be interesting to see how this one will play out. This one's one of those that I want to see what they do on earnings. So I wouldn't play this into earnings. I'd be watching this for after earnings to see what direction to go. If it severely knee jerks to the bottom, I'd be looking for the rejection push the upside. If it pushes to the upside, but it pushes on basically just volume alone with no real catalyst within their earnings, I'd be expecting to pull back. So we'll pay attention to this one, see how this one goes, but we could be looking at a pretty rangy type of trade. I'd be looking at, a 72 to 78, so maybe a $5 range type of trade in this particular one. iSurge, it's been pushing really, really hard, due for a pullback, in my opinion. We recently broke out of the previous level, right? We consolidated, we pushed. I think that we probably come back down to retest some of these levels, maybe not all the way, but get some of it back, about 370, maybe at the top 365, something like that. So I think we pushed pretty hard here recently. I mean, look at this, this is huge. Anytime I see pushes that are this huge, where you break out and look, got a different, right? 339, 321, right? So that's about a $20 move. And then where was our push, right? All the way up here, about 365. What's that? 340, 365. That's about $25, right? So that's about the difference from here to here, flipped on its upside, right? This is why that makes sense. So I could see us losing about half of that gain on just a retest in a cool down period, seeing if we are ready to be elevated as high, if not clearing this gap to clear this out of the way. Abbott, um, this will be interesting. Again, this is one of those rangy ones that I don't really like watching. See that type of range. Yeah, just these make me nervous anytime. It's not as severe of a grade as the previous one that we had, but it's enough that it makes me think that, you know what, we recently were here 95, we're all the way up at 114. I could see the case for the pullback to go retest the previous shelf level at, the 110 area, maybe even clear this. But I can also see the case for the breakout, getting the difference between this previous level and this level and getting that flipped on the upside, pushing us to, 125, 130. So we'll have to play this one by ear, but I would be more inclined to um what's the term, play this one, buy the rumor, sell the news on this one. Union Pacific. This one will be interesting. I like this one long. We're starting to get the cup here. I think this one, I've always had good performance with this one trading, for some reason. We had it over here. We shorted it very well when all the issues with the railroad stations were happening, made killer money off of this one. And now we're starting to roll back, right? And so we had this little downtrending channel forming that cup, you know if we can keep the pressure up. I like this for the retest of the push up here. If we can't, if we fail, then this one starts to form that H formation, and we're gonna where you kind of get that H, where you get your line here, and you get your sideways movement here, and then you get your leg to the downside, right? And we'd be looking for the strategy to the downside. So this one would be playing it by ear, seeing how we perform going into the week. But I do like the way it's set up for a potential break and a retest. There's previous highs. We could see about, $5, maybe $10 on this one. Service now, and you see this everywhere. If AI is the wild, wild west, does that make service now technology the new gold? That thing with Matthew McConaughey or whatever. Um, so it'd be interesting. We already had our cup, right? We had our breakout. Um, this will be interesting to see. Here's the thing I want you guys to understand with these big tech earnings, okay? Again, we had this unnatural, real high push here, right? And then we get another unnatural push, right? Can only do that so often before you cool down. These big techs, with these earnings, right? The proof is now going to have to come into play. Okay, these guys are going to have to prove that they're worth the evaluations. Okay, if they don't prove that they're worth these evaluations and then some, they're going to fall and they're going to come back to reality. Okay, so just be cautious, getting overly zealous on these, right? Because we push extremely hard, 517 to 754. And when was this? Look, that was back in October. So, $250 move, right, on this stock. Huge unnatural curvature, right? A little bit of the pullback and another unnatural curvature breakout. Okay, so I think this one is due unless they kill earnings and just beat all sorts of expectations. I think we see the pullback on this one, and it would be right to come back down to about, maybe not 420, but the difference between here, right? Next shelf lever, clear this gap here. So 427 or 727, 725. All right. BMI. All right. Um, I don't know what I think on this one. This one's kind of rangy. I think this one has a lot of crap. Not much volume. I probably won't be trading this one. Um, I don't like the chart at all, be honest with you. Doesn't have much volume. Um, I could see the case for the breakout to the upside, which could give a $20 push. Yeah, I could see it. Absolutely. It also got some, you know, gaps to the downside to clear, but this volume comes into question with this one. And then when you look at The 160. This might be a gamble to take, has some volume on it, you couldn't go deep, what's the open interest? Yeah, you couldn't go deep on it, because you wouldn't be able to come in and out, but has a little bit of interest. No interest there. No interest there. None. Yeah. So you can see that this doesn't have much volume at all. There's not much interest. I wonder what puts look like. No one's going short on it though. Do you want to take a gamble? Oh, well, that's a huge spread. I didn't look at the spread. I was just looking at the bid. Wow. I wonder what you could come in there and put in for a limit if you came in there at if like 100, if you would even fill, because that bid ask is very wide. So, we'll watch this one, but at this time, not really interested in it. Dow, I can see the case for the push to the upside. Um, go retest the previous highs. That is if we trend. That is if we're trending. Okay, so we got to be trending. Otherwise, if we're not trending, we're gonna probably look for the retest of some lower levels. Johnson Johnson looks good for a break. I like this setup here. I like Johnson Johnson for the breakout to the upside 165. I think 165 I think is a good opportunity. Yeah, coming here, got the cup, got your handle, break to the upside. 165 puts you in line with previous shelves. Yeah, I like this one. Got a lot of volume to the upside. This 170, giving yourself some time. Pretty decent spread. 165, decent price here. 170 for the budget friendly. 165, staying at the money. I like it. Yep, long. Johnson Johnson, 16 February looks good. This one looks like we're going to probably come down and fail to the downside. We're starting already our leg to the downside, consolidating and broadening. Probably got another leg to go clear this gap. So I'd be shorting this one at least to 100. So looking for it to clear this gap and probably get a little bit of an extension. So this one is a short crown castle, in my opinion. We already failed out of the breakout, and I think we probably underwhelmed. We're already starting to form the H. Look, down, coming across. All we need is another leg to the downside. We got our H, so be short in that one. T-Mobile. T-Mobile's been killing it, guys. And at this point, this is the preferred communication stock, a telecommunication stock, and there's no reason to see why we can't extend a little bit. We haven't got the breakout. We got here out of consolidation. We got the breakout here. We got a cup. We got consolidation. If we're gonna break again, I don't see why we wouldn't break at about the difference from our level here to our level here, right? So you're looking at about 62, 54, $5, $6 break to the upside, 170, something like that. All right, the big one, guys, Tesla. All right, you guys already know I did this video the other day, and I put my things here so you guys see this here. This goes for you guys too. Tesla, 220 or higher by 26 January, or I'm gonna give a random person $100 gift card to someone that texts me on the business line when I do the market wrap live stream on Friday. Okay, we already got one that hit me up. They haven't hit me up, so if you're listening to this person that hit me up with the merchandise on the YouTube, I sent you the link. You never got back to me, so if you want that merchandise item, hit me back, man, because I sent you the link to the merchandise. You just got to pick what you want, and then text my business line with your information. I'll get it sent out to you. But yeah, Tesla. I'm gonna go for it with coming out of this. I see this, especially on Tesla. And I think rejection. We could continue down, but not before we get a strong bounce to go retest, right? So strong bounce, retest some levels, and that's about where I think we get our bounce, retest, and then we'll see if we can hold, and maybe we're on to breaking out. And this is following its mega cap predecessors, and Tesla starts taking over market share and stuff again, right? But if we don't, we're gonna get our bounce, come up here, fail, and then we'll come back down for the next leg to the downside. But I feel good with the longs going into next week with Tesla, and it's going to be one of my preferred stocks to trade on Tesla. RTX, yeah, this one looks like a pretty good push. Now it had this huge dump, right? And I did some fibs on this the other day, right? Let me get rid of these fib lines though. There it is. Let's go back. All right. Huge dump, consolidated, huge dump down, right? Found our bottom, and we've been on a nice swing to the upside. So we're right back here where we were previously. So this is one of those where I just do probabilities, okay? I just put a line, I put a line, and then I put a midline, and I say that's my target, right? So 90. So $5 push to the upside on the break. That's basically where I'm looking at. So this is my target zone. That's also my zone two, where I'm expecting some resistance to come in. And if we don't break through and then go retest this area here, we're most likely coming up here, testing this, and then going to come back down and probably come down for two parts down. So we come down and then we come down, and then that's becomes our support and resistance range for the new area. Colgate. All right, Colgate's been killing it, guys. Now listen, with these I can't remember the name of it, but these commodity type of stocks, right? Um, these are everyday type of stocks. Uh, price has gone up, toothpaste has gone up, toothbrush has gone up, but people still got to use them. They still got to buy them. They're making a killing on their margins. Okay. There was a report that came out, so a lot of these companies, they bet big on increasing their prices, and they were able to really hone in on their margins and make some good money. So I like Colgate. I think Colgate has a good opportunity for the push to the upside. Again, coming out of this consolidation zone for another leg up, pushing it towards 82 would be about the zone. Gonna be looking to. Logitech, man, I love me some Logitech, guys. I bought shares of this back when it was here in the 50s, and I've been liking it ever since. I don't play options on this one very much because I own shares. So I'll sell options, but I own shares. I don't know if right now is a good time to buy shares, because potentially um we could be coming out of this consolidation zone, and we could be coming down to the downside to go clear some of these gaps, right? Got some gaps to the upside, but we could come here. So I don't necessarily know how this is going to perform on earnings, but I like the company. Every time I listen to the CEO talk, very clear, very concise. Their mission is sound, and I like the product. I do. I like the product as kind of a you know if you don't want to go with example, if you don't want to go with the $100 charger that is Apple brand, right? You can go with Logitech and save yourself $50. So I like them. So I see the case coming out of this consolidation rangey break to the upside. 100 would be my guess. But if we fail, then we're most likely going to clear and cover this gap down to the downside to go retest this previous level. So I'd give us a range of about here to here. LUV looks good for a break to the upside. I'm not sure how these airlines will do on earnings, but chart suggests that we have a lot of room to the upside that we can clear. So I think LUV has a good case for about a push to 33. So I'd be going long on this one coming out of this consolidation zone here, break up to the upside. So I do like it long, pushing up to the net to the shelf to go retest those areas. Kimberly Clark again, that's like that Colgate one, right? Killing margins. I like this one for the break to the upside too. I think right here at 122, we got a good case for 125. Uh, Depending on how good the earnings are, if they truly kill, their margins with the earnings call, we could even see 130 on this one. Alaskan Air. Now this one's a little different. This one doesn't perform like the other ones do. The chart would signify that we got probably a leg to the downside. So if I was going to play this shirt strictly off of technical analysis, I'm looking at this chart here. I'm looking at this downtrend, the push here, this kind of triangle motion, and this is signifying me the beginning of that H formation. So we're looking at that leg down, that consolidation pop, and then another leg to the downside to go retest these further levels. So I'd be betting on this one to probably go short. I'd be going short to about 32 on Alaskan Airs. Procter & Gamble, another one, a nice rangy one. We're on the downtrend of the range. I like it for the bounce from here and the push towards here. So we're looking at a push up of about $5 to the upside. So long Procter & Gamble for the break from the bottom, push back up to the zone. Lockheed Martin, always a decent one to play. I like this one for a push to the upside, 470, I think, before we start to see if we can hold resistance level here at top for the break. So I do like this one going into earnings. I think Lockheed Martin has a pretty good business model, and they're making some money specifically with this war carrying on. Netflix. All right. We did some DD on this the other day. We got a top shelf here. We got a nice trend to the upside. We're starting to get tight. I like this one for the break. 550 is my target on Netflix. I think Netflix, when it breaks, it's going to break hard, and we could see a lot of push to the upside. So Netflix 550. American Airlines. American Airlines is one that always likes to try to push, but it underperforms. We got a nice little rangy thing here. You can see you get your double tops and then it comes down, you get your double bottoms, comes up. Right now we're kind of in between. So, with American Airlines, here's how I like to play. Here's how I'd be playing American Airlines. I'd basically put a battle zone, right? And I'm gonna put my top line here, put my bottom line here. And then what I'm gonna do is I'm gonna come down just a little bit. And I'm gonna come up just a little bit, right? And I'm gonna tell myself a break of this zone, I'm going long, looking for the breakout. A break of this long zone, I'm going short, looking for the breakdown. So that's how I'm gonna play American Airlines. Las Vegas Sands, we got a lot of sideways movement. This tells me we're probably looking for a move. If we go off the chart though, they need to kill earnings because what we got here is remnants of an ascending wedge coming out of a downtrend, an ascending wedge, which gives us case for the push to the downside. Okay, so we need to be careful with these, right? Need to be careful with these coming out of the downtrend, right? A nice little ascent, but we need to be careful because if we don't break, right, we're going to come down. So just be cautious with this one. This one will be interesting to watch to see how this one unfolds. And UAL is kind of the same case with American Airlines. I'd like to be bullish on this one, but this is one of those that we're going to play in range again, right? We're going to put a thing here. This one's actually a little bit better case, I think, for a potential bounce play if they do fairly well on earnings. But put our bottom, and we'll put our top. We'll break here, we're looking longs, right? We break here, we're looking shorts. But I think this one has a little bit more potential for the bounce play because we hit here, and when we came down on the downtrend, we held this area fairly well with the bounce. And it came back down about 50% of that and held that zone. So it would give me the idea that we're looking for the potential break here. And if on some good earnings, we could break and then break out, and we got a lot of room to the upside. So That'll be interesting to watch. All right, so that is all of the earnings that we have coming in the week of 22. Now, let's switch over real quick, and I put a couple preferred ones moving into next week. All right, so these are just ones that we're looking at. This is the next week. After this is the big boy week. Okay, so we're looking for Apple to trend this week going into earnings. Okay, so if the market stays strong, we're looking for Apple to start making that run towards those 200 levels, right? To break those all-time highs going into earnings. Okay, Microsoft has been absolutely on fire, all right? But be cautious, okay? Now this could continue to run, but again, look at this push coming out of consolidation. We already got one crazy more run, consolidation, right? We had here, right? And then we had another crazy run, okay? You know, you can only do crazy so many times before you're going to get a little bit of a cool down period. So just be cautious. Okay. This is a huge run. 329, boom, popped up, consolidate, boom, 400. Okay. That's, a $70 push on Microsoft, and it was 300. This is $100 move, right? Now, I think that this one has potential to probably sell off a little bit going into earnings, giving buyers an opportunity to buy into it on some decent earnings plays. Sirius XM, I like this one for shares. This one's a fairly inexpensive stock. So shares, anytime you're in this $5 zone, absolutely. We bought in back here in the $4 and $5 zone, and we were able to actually 2x our money over here in the eights, which was a fantastic trade. So now with 2024, we're looking to probably do it again, buy in shares and look for a decent push, maybe eventually seeing if we can break 10, making another 2x play. SoFi, SoFi likes to hurt people's feelings. Okay, so just be cautious. SoFi is a fintech bank. Okay, the banks have not been doing that well, so I just want you to be cautious. I know SoFi is a very popular stock with people, man. People love them some SoFi, man, and I get it. Okay, but I would just be real cautious with going too long on this one because we're looking like we want to get that H pattern, man. Came from this leg down, look, leg down here, consolidate here, looking like it wants another leg to go retest some of these levels, okay? And it's not afraid to get down here. It's been there multiple times. Look, it's been here before, multiple times. It's been in the fours, okay? So it's not afraid to do it to you, all right? So just be cautious of this, of hurting people's feelings. Aflac looking like it wants to break out. This would be probably okay stock, steady push, break maybe for a $4 or $5 push. Aviv looks like it wants to push a little bit more. Okay, it's had a pretty decent run. We could see a pullback on this one, but right now it looks like it wants to push a little bit higher. So, the trend is your friend. So until the trend reverses on us and we get confirmation, you got to ride the trend. All right. So right now we're bullish on this one, but we're not afraid to turn that and flip that and go bearish. ConocoPhillips been beat up. I like this one for a bullish push from these levels going back up into the 115s. A line, man. This one's difficult. Okay. I mean, you could see the numbers right here. 400 absolutely got destroyed. A lot of people bought into it down here. It's been steadily inclining, right? But I don't think it's afraid to take a decline. This is what Align is, one of those tech companies that deals specifically like with Invisalign and stuff. And I don't know if a lot of people got enough money right now to really be investing in Invisalign like they were. I'll be honest with you, we're not struggling for money, but my daughter wants Invisalign, and you know, I was looking at the price difference between regular braces and Invisalign, and regular braces are way cheaper, and I don't have to worry about her losing them where I have to go buy some new Align, some Align teeth and stuff. So I don't know. This one will be interesting to watch. This one's one that I'll probably just sit out and I'll watch and I'll wait for earnings to see what happens. Or if I see a potential move going into earnings where I get some decent volume, but volume's been lowering on it. Okay. Volume's lowering on it. So we could see some buyer's exhaustion here. So just don't be afraid you see the opportunity for a short play back about $15. don't be afraid to take it coming out of this consolidation zone. Pfizer, we're hitting the top, man. We've been at this top. We've attacked it multiple times here recently. Every time we've attacked it, we've rejected it. Um, you know, possibly this time is the time that we accept it, and then we can break towards this level here. So we'll see what happens with Pfizer. Starbucks, I've been telling people Starbucks um, to 90. Right now, we're set up pretty good for it. They're gonna have to really do something amazing with with their stock, man. I'll be honest with you. I've noticed people, Starbucks used to be packed, right? Um, and stuff like that. Ever since it got super expensive and they changed the recipe, a lot of people are not digging what Starbucks is putting out, man. They don't think it's worth the price that it has anymore, and they're starting to lose a little bit of popularity in some areas. So I would not be surprised if they suffer a little bit, and we can see that push to the 90s. So I like this one for a short play. Merck out of consolidation zone. Oh man, we're shorting this. Okay, this got to cool down. This was too much of a push. Okay, Merck's going to cool down. So we're going to watch this one as it's broadening in consolidation, and we're going to watch this one break back towards 115, maybe even 110 on lucky volume. CVX, another case, it's holding this bottom fairly well. I like CVX for a bounce play, pushed up the side. We won't get all of this back, but I would like to see it kind of come here and retest these upper levels of this previous consolidation zone. And then that'll give us a good indication of where we're going to go. If we're going to make a run for coming out of this bottom tower formation, or if we're going to reject and go for a leg to the downside. UPS, I like this one for the breakout to the upside. I think we got plenty of room to run. UPS is one of those stocks. I think we could even make the case if we give ourselves enough time that we could go in here and we could go top, right? Go bottom-ish here. And then we can go ahead and put target like 160, 170, 165, somewhere like there, right? So 170 about the target for me on UPS. I like it. XOM break to the upside. I like it. It's been hurt. It's below 100. Anytime XOM gets below 100, it seems to get a lot of juice. You can see we're lower than we have been for a while. I think it's time to go ahead. They're going to get some people invested in this, and we're going to start seeing this push. So I could see XOM going above 100, maybe 102 or something like that. CBOE, consistent incline, pushing. No reason to see it fall now unless they tank earnings. And Cardinal Health, this one will be interesting because, like I said, the healthcare sectors are really having some struggles. You saw the insurance companies; they really, UNH and some of the other ones, they really had trouble. So Cardinal Health will be interesting um, to see if they're making money from this increase of medical, or if they're suffering because the increase in medical is making it harder for them to sell their units and stuff like that. So it'll be interesting to see how this one plays out. If I was a betting man, though, I'd probably bet for the push to retest the bottom levels. And I think, oh, I guess Boeing. All right. Boeing. This will be, here's the thing with Boeing. We got a strong bounce, right, to regain some of this level, but this is this is uh this is set up for potential rejection at this area for the push and a retest below those areas back to go to the 120s, 180s or whatever. So it'd be interesting to see how this one plays out. They made some killing, but that uh that negative news, some of those tests really hurt them sentimentally, right? So we'll see how this one plays out. There's still a lot of bullish calls on this one to break their all-time highs by the end of the year. So we'll have to play this one by ear and see how this one folds out. Charter, sitting wedge. if you look out on a broader spectrum, right here. Okay, so you're descending, getting tight, getting tight, getting tight, and you're gonna come to a decision point. Okay, so this will be interesting to see how this one performs. If I had to bet, I'm going to bet probably on negative pressure due to people cutting the cord and streaming becoming the thing. So I think I think we'll probably get here, get squeezed. They'll come in, maybe revenues in line, but the forward guidance will be negative in nature, and we'll probably see the leg to the downside. Meta, absolutely killing it right now. No signs of turning back. Right now you can make a case for 400. Um, but it's also be careful with this one because this one's due for a pullback as well. Okay, you got your Google, all right? Google, every time it gets these patterns, remember, we did this the other day, right? Every time it gets these patterns, what happened? Pattern here, consolidates, drops, pattern, drops, pattern, drops. Look what we got. Pattern, consolidated, it pushed up again, everything pushed up, but that's a twofer, right? Probably see the drop. General Motors has a good case for a breakout here, but you're not going to see an explosive push. I would say maybe a $2 push to the upside. Whether this is even worth options, I don't know, but definitely, shares could be bought in this zone here. QCOM absolutely got destroying it, right? So QCOM would be interesting. This one's actually preferred. The preferred chip stock by some analysts. It's not like the sexy one like the NVDA and stuff, but it's the preferred one for growth over this particular year. It says there's oops, people that say it has the best potential. So we'll see what happens with this one. Could we see the pullback and then get the push going into earnings? Yeah, absolutely. And AMD absolutely just took off, man. 93, 176. No signs of stopping, but I do want people, when you see things like this, once you start seeing the buyer's exhaustion at the top, right? Volume's still high on it, right? But once we start to see the volume lessen and we continue to keep the rise, okay, we're looking for the reversal to the downside. So, all right. That's about all I got, guys. All right, man. Hey, so we went over a lot of stocks. Okay, today was just stock focus as a motivator. I know sometimes this is the nuts and bolts, and it's not the sexy stuff and all that things, but this is the stuff that gets us the plans, though. Right? This is the battle, the strategies of moving forward, what we're looking for. So hopefully, I covered some stocks that you're into. This was all earnings related, since we got the huge earnings forecast coming up this week and next week. There's going to be a lot of money potential to be made. So we just have to be on the right side of the ball and we have to be ready to attack. So that's all we want to do, guys. So, thank you for Sunday. The Chiefs definitely are going to the conference championship. I saw Tampa Bay, they got knocked out. Congratulations to the Lions, man. It's been a while, man, so they deserve it. So, we're going to see the Lions, at it. Haven't seen them for since like 1991. So, it'd be interesting to see how, but, yeah. So hopefully go out there, we'll make some money. If you guys looking for those trading investing alerts, definitely hit the links up in the description. Join Traders War Room platform, and you get all the real-time alerts. And remember, we do live trading daily. Every market bell, we got professionals that are pushing out live streams so that you can ask questions real time. You can see how the pros do it real time. Instead of the stock charting after the fact like we're doing now. This is the preparation stuff. It's really the preparation stuff and seeing it done live that really formulate you as a trader and investor. So I'll catch you guys when that market bell rings. And as always, if you're ready, follow me. Let's go to war. Let's go out there and make some money tomorrow. Later, guys. All right, team, that's a wrap. Check out TWR's platform and come get some. Remember, scared money don't make money. You got to have a plan and a strategy. Got to be able to control your emotions. Stay calm, cool, and collected. And as always, if you're ready, follow me and let's go to war.
In the traders war room, warring with the market every day. We on Zoom. Never gonna quit, ain't no way we gonna lose. I done made a profit and it's way before noon. Way to go, dude, come and learn how to trade stocks. We rentless with the attack when this thing pop. We market warriors and we can share the same pot. I woke up and went to war in my tank top. Thanks, Pops, he an analyst, a veteran. And we ain't hating on them other dudes, we better than. I was down and then I learned about leveraging. And after that, I ain't never went red again. Green, right? It ain't bad, it just seemed like something wrong with you if you say we ain't tight. Get in and get out before you think twice. Let's have a toast, you bring the drinks and I'll bring ice. Defeat's nice in the traders war room. What you wanna do in the traders war room?